Yo, you know this kid? Said I didn't, but I know he did. Said get ready, because this ain't funny. My name's WMD, and we're about to make money. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. Let me know how it can help. Have just about 20 years of experience trading Forex. Cool. So I can bring some of that experience to the table and say, hey, let me know how I can help. I also have a macroeconomics degree from Harvard, so we can talk about that kind of stuff. I can bring that to the table. Let me know how I can help. We take technical and fundamental, we put it together, and we want to find trends, and then we want to trade price action in any form of measurement you like. Moving averages, Elliott wave, Fibonacci, oscillators, whatever, bro. Sell high, buy low, go with the trend, let the winners run, keep your losses small. That's it. It's just that easy. The thing is, we make it complicated, and it is actually, like here's how I describe when somebody says, oh, wow, you're a Forex trader. What's that like? And I said, well, you have to know absolutely everything globally, and then accurately predict the future every single day. But besides that, it's pretty easy, pretty straightforward. Well, of course, being facetious, it's straightforward, but it ain't easy, bro. So I'm going through this process just like you are. Every day I try to stay motivated. I try to stay focused. I try to stay sharp. I have to have an A game every game. Okay, this is like championship level athletics. Okay, we're the dream team. And it requires a high level, a high standard of excellence. So I hope you bring that A game every day as well. And if so, we got a shot, man. We got a shot. So I do this every day. It's free. Subscribe. Great. Also, there are thousands and thousands and thousands of videos on YouTube associated with my work, on the Forex.Today YouTube channel, on the FX Bootcamp YouTube channel, on the Trader's Way YouTube channel, on the FX Street YouTube channel. I was even Speaker of the Year on FX Street. Blogger of the Year on FX Street. Special Event of the Year, FX Street. So I've been working with them for almost 20 years. So cool. I've been around, son. Okay. I've been trading Forex longer than most of the other YouTube gurus have even been alive. My kids are older than them. Anywho. So let me know how it can help. In the description below, there's a link to a free training course on the FX Bootcamp YouTube channel. It's free. It's about an hour, hour and a half. It's good. And there's no sales pitch at the end. You're like, oh, this is really good. Now you should buy it. No. It's just really, there you go. There's a link to my book. It costs money. I don't own the book. Wiley Publishing owns the book. They set the price. They sell it. I wrote the book, contributed to society. It's at the Library of Congress in perpetuity. Did my contribution to this effort we call Forex. Also, you'll find a link to tradersway.com, an ethical, trustworthy foreign exchange broker that wants to be your service provider, and they want your foreign exchange trading business, whether it's yours as an individual, maybe you incorporate, which is probably a good idea in the United States of America, whatever. If you open up an account there, they want you to succeed. Their business model is based on a symbiotic relationship with you. If you succeed, they succeed. If you succeed, you'll trade daily or weekly or monthly. And over time, as your account grows, perhaps your lot size will grow. And they provide the service of taking your trades off their platform, entering it into the pool of liquidity partners, providing that service to you, doing it quickly. Remember, some brokers might have 50,000 foreign exchange traders all on the one server. 100,000 traders all on one server. So it's going to be slow as molasses on a cold Georgia morning. Hey, Trader's Way is faster. The spreads are competitive. They pay you huge swaps. Dude, check them out. Tradersway.com. Before we get into the technicals, is there anything fundamental going on? PCE deflator? Rig counts? What else is going on today? Anything fundamentally interesting? Just the rig count? Oh, well, maybe it has a little bit to do with this Jackson Hole thing. Yeah, in a couple of hours, actually in less than an hour. Right? In less than an hour, Jay Powell is going to clarify. I have a feeling, but I can't trade a feeling, but I have a feeling he was misunderstood. So he might come out and correct the market and say, no, I wasn't dovish. That's going to bring a lot of dollar strength. Now, he might not say that. He might say nothing. I don't think he's going to say, yeah, we got, look, he could say, let's look at the facts. What's happened since the last Fed meeting? We've probably have hit peak inflation and jobs are ripper hot. The job market's still ripper hot. So what's the likelihood he's going to say, well, we've hit peak inflation, so now we're going to really start scaling back on our program? He's going to say, well, look, rents are still really high. Wages are still really high. The job market's still ripper hot. And yeah, maybe we hit peak inflation, but we're still like floating around the niner. We're better than the UK and Europe, but not by much. So that's going to be most important, more than all these other things. Now, the other things like PCE is super important. But now this supersedes it because the reason we track PCE and other economic indicators is try to figure out what the Fed's going to do next. Well, the Fed's going to tell us or try to communicate what they want to do next. Also, not just Jay Powell, but there's a lot of other interviews with Fed officials. So we're going to get like a whole mix of information. Okay? So, holy smokes. That's what matters, and that's going to happen soon. So let's make this a quick and dirty. Let's do a quick and dirty today on this session because I need to get out of your hair so that you can trade. Okay? And me too. All right. So I'm backing out here, and I'm looking at the indices. This shows us the longer-term trends. So now we're not saying, well, dollar was strong, now it's weak, and now this other thing. Okay, this is stepping back. Okay, this is stepping back. Euro is very weak. Pound is very weak. Okay? And yen is weakening. Where's the money flowing? Commodities? Not New Zealand, although New Zealand is expected to really start jacking up interest rates. So that's kind of the interesting laggard. There might be an opportunity with Kiwi. But right now, the money's flowing to Australia and Canada. And it has been flowing into the dollar after weeks of dollar weakness, which is fine. Now we're going into this risk event that's particularly focused on dollar. And so it makes sense that maybe some people have taken some bets off. But I have a feeling that Jay Powell is going to try to clarify that inflation may have peaked, but it's still a problem, that interest rates are still below neutral and they need to go above neutral, and that they haven't figured out the terminal rate. And it's plausible that the terminal rate right now is priced in too low. And then he might, and this is even farther out now, what people are pricing in is that the Fed is going to pause in the summer of 2023, and then by the fourth quarter start cutting interest rates. I don't think that's going to happen. And in fact, I'm not even sure terminal is going to be hit by summer. Because if we get to summer next year and find out we still have 6% in inflation, then we're going to need to get interest rates to like 5%. And you're like, 5%, Wayne, that's radical. When I first started trading Forex, we were at the 10-year T-note was something like 5.5%. Guess what the euro was worth? 98 cents. So here we are, euro dollar's worth 98 cents. Why can't interest rates in the United States go to 5? Right now we're only pricing in 3 3/4, not even 4. So I think we can learn a lot over time, over the next 12 months. And yes, we might get inflation down from 9 to 6. But if it's sticky around 6, why can't we approach 5? And of course, that's a double negative. We could approach 5. But we don't have that priced in. All that means dollar strength could be there. And then, of course, if Putin plays his card, dollar strength. Interesting, right? So watch the bond market. One of the things I keep preaching at the swing trading group and the day trading group is we're really bond traders. Okay? Who owns the most treasuries? What country owns the most U.S. treasuries? Who's the biggest purchaser of United States treasuries? Which country? And it's by far the huge, right? Like 2/3. 2/3. Who owns 66%? And I don't know if that's the right answer, but like the vast majority. The United States of America. Huh? Whoa. So if you put China or Japan, you're way wrong, dude. You're not even close. Boom! The United States of America. Now you might say, well, the Fed, like think of it, guys. The Fed owns $5 trillion of treasuries. China and Japan don't own even $1 trillion. So just the Fed. Okay? But also, how about American pension funds, American insurance companies, American money markets, American investors? Okay? All right, who's number 2? now you got to put it again, right? All right. Because you're going to put the same ones again, right? Is it, most people would say China, but China stopped buying or slowed down their purchases of U.S. treasuries. So not long ago, China owns something like $1.2, $1.3 trillion of American treasuries. It's now less than 1 trillion. And Japan is now the biggest holder of U.S. treasuries. Isn't that interesting? Japan owns 4% of U.S. debt. That's it. China probably owns, I'm going to guess here, 3.8%. That's it. Woo! Okay, isn't that amazing? That's it. So when you hear about the end of the world, that China is going to weaponize the debt and dump all of it. Have you ever heard anything like that? One day China's just going to dump all the treasuries, all the U.S. treasuries, and crash the U.S. economy. Have you ever heard something like that? Maybe you haven't, and then we don't have to talk about it. Yeah, we don't have to talk about it. I've heard it many times. That comes from people who trade on fear, by the way. Fear. Oh, that sounds scary. Uh-huh. Nope, no one's heard of that. All right, cool. So let's move on .com. Let's take a look around the world. Never gonna get it, 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 never gonna get it. All right, so the dollar's giving back right now, and that benefits South Africa. Look at this. Actually, over the last couple of days, it's actually set itself up, which is kind of interesting. Now, if Jay Powell says something like blah, 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 and the market decides that that means higher interest rates, then this one is going to get killed. It's going to go up. Lucas says, the media says it all the time. Yeah. Well, what do you think would happen if China sold every single bond? Well, what is Japan doing as people are selling JGBs? Right? We all know, and if you don't, oh my God, where have you been? What planet have you been on, right? If you don't know, the Bank of Japan, as Johnny said, has been doing yield curve control on the 10-year JGB. Cool. We'll just do that. Do you think it really matters if the Fed has 5 trillion or 6 trillion? Who cares? Whatever. Okay? But it just doesn't it's not logical. See, they don't understand, right? They're like, oh my God, China owns 1 trillion in U.S. debt. Yeah, there's 30 or 40 trillion, so who cares? Right? Is there actually more than that? What is it, 60 trillion? 70 trillion? I don't know. Like, who cares? Colin says, hey, man, would South Africa raise interest rates if the Fed does? Yep. Yep. Well, but also, because look, the issue is that South Africa has debt priced in dollar. And so now it has to compete with other emerging markets like Mexico and say, hey, investors, don't lend Mexico money, lend us money. Don't invest into Mexico, invest into South Africa. Hey, don't buy Mexican products, buy South African products. Okay, so they need to compete. Okay. Cool. So anyways, that's interesting. Also, there's some yield hog stuff going on here. If U.S. interest rates rise, the dollar gets strong, but also the carry gets diminished. So yeah, South Africa to catch a carry investment would have to be even higher. So, I don't know. So the answer is, yeah. But, like if you look at like interest rates in the Czech Republic, right? What's going on there? Let's see. Let's go here. Hang on. Every dog on the street. So like these guys need to compete too, right? Okay. By the way, they have a global outlook. You could read the minutes from their meetings. There's a lot of good information here. Look at this. They report their international reserves. Remember the crisis in Turkey and then in Sri Lanka? They didn't have any international reserves. So this is like fantastic information, right? Commentary on inflation. They like to keep it around 2%, and it's 17.5. Oh, criminy, holy smoke. What the heck? Oh, my God. Look at all this wonderful information. There's so much you can learn. So, think about it. You're an international financier. You guys use that one yet? When you meet a beautiful person, and they're like, what do you do? Oh, I'm an international financier. Hey, it's a good start. Oh, you're a day trader? Oh, you don't have a real job? That's what that sounds like. So, oh, you're a day trader? Oh, are you into that like crypto stuff? Oh, you don't have a real job. All right. No, you're an international financier. So think of it that way. Should you loan money to the Czech Republic or Hungary or Poland? Should you lend your money to South Africa? Should you lend your money to Mexico? There's a lot of interest right now in South Africa. There is a lot of money going there because the other carry trades don't have enough carry to even start to address inflation. Okay. So anywho. Yeah, well, I'm working on adrenaline, Darko, so thank you. I appreciate that. I didn't sleep enough. So I have 2 energy drinks and 3 cappuccinos in me. So happy, don't worry, that's going to fizzle into a crash soon. But, look, we're a half an hour away from a market that is gonna move. And I got to be up for that. But then I got some meetings I got some meetings this morning and some other stuff going on, and and I got to be there for the trades, and I'm just stretched thin, man. So you got to just every legal drug, right? And then, by the way, this is me working on my life balance. Every weekend, I promise my wife I'm going to be more balanced. And then by Tuesday, she's like, you're not balanced. Oh, baby, I'm trying. I don't know if you've been there, but all of a sudden, by Friday night, it's 7:00 and I crash. I'm out. It's 7:30. I've had a glass of wine. I took a dip in the pool. Now I'm going into the house. I'm going to go to bed. So there goes Friday night. There goes the relationship time, right? And then you get Saturday. And then Sunday I work, right? So my balance is like 1 day a week. And what do I do most of that time? Read newspapers, read central bank reports, plan the week, look at my charts. So I'm working, man. I'm trying to find balance, baby. I'm trying. I'm trying. Yeah. So good for energy, but I'm going to crash. Don't worry. I just got to get through Friday alive, man. Yeah, and I felt bad about that, Darko. I told my wife, like, honestly, I didn't know it was 3 hours. I don't know how that happened, and I apologize to the swing trading group, but I thought we had good conversation and good topic, but I didn't realize it was 3 hours. Yeah, so I apologize that to the swing trading group. That's a bit too long, but we covered a lot. Okay, so we're done with exotics. We go through the commodities. I want to show that this is probably going to pop. Okay. Where's it going to pop though? So this is where you have a fundamental bias and you wait for your setup. Okay. And this is probably going to move in about an hour, but it's going to move at the end of the day. Okay. Thank you, Denise. That's kind. Thank you. Okay. It's also going to move today. At the end of the day, we have the Baker Hughes rig count. Now, if you look at the oil inventories on Wednesday, you'll see that we had a modest drawdown. But the thing is, we added like 5 or 6 million barrels from the Strategic Petroleum Reserve. So if my mind serves me correctly, the real drawdown in oil was 11 million barrels. Holy smokes. So if we didn't have the Strategic Petroleum Reserve, that it would have been a huge drawdown. So instead of 5 million, it would have been 11 million. But look, where are you going to get the 7 million that we took out of the Strategic Petroleum Reserve? Where do we get that oil? Where are we going to buy it from Iran? Wouldn't that be interesting, huh? So we're going to run into a problem. But anyways, that's what I'm looking at. Also, U.S. production has slowed. We dropped a couple 100,000 barrels. It's not a lot, but we've sucked some of the wells dry. Okay, because I would imagine, even though now oil is still $90 to $100, that should be profitable enough for these wells. So the only reason we're producing less is we've taken more out, and that's that. We can't, we're maxing out. So we kind of peaked maybe on U.S. Capability. So what we want to look at is how many new rigs are coming online. Because the rigs that we have online are producing to the point where they're slowing down, not building up. Now, not statistically a lot, but it did happen. Okay? So we got drawdowns and we got rig counts. So the drawdowns were massive on Wednesday. And then now we want to see a build-up of rigs today. But if we don't, then we have this situation of we're not producing as much as we did just a couple of weeks ago. We're burning through our inventories like a forest fire. One day we won't be able to tap the Strategic Petroleum Reserve because it'll be empty. And we're not adding new. Okay. So that's what we want to look for today. So oil and CAD's probably going to move, but it's going to move first on the news. Is the Fed going to put the U.S. economy into recession? Okay. So, I hear all the time that the Fed has stopped forward guidance. Has anyone heard this? That they're just data dependent and there's no forward guidance. Okay. Well, he also said, why don't you look at the Committee for Economic Development? You'll have to get it in the notes, the meeting minutes. Now, they do a lot of research. Okay. But they're looking, I think it was the Committee for Economic Development. I don't think it was OECD. Or maybe it was President. Hang on. Maybe it was this one instead. Hang on. Oh, Google's getting bad, man. All right, here we go. That's not the right page. Hang on, they gave me the wrong page. That's about economic written materials. Maybe. Hang on, let me try to find something. Here, this is where I am. Maybe you need to do some research yourself. Okay, this is what I've done is, this is from the White House. The president has a council of economic advisors, and they track they have their own economic indicators. And then here's their research. So if you go to now the most recent one, this is the report the President of the United States receives. And the Fed said, so I think this is the right thing here. Jay Powell said, why don't you look at this? Which means they look at this. Okay? See, disposable income, personal income, real consumption, national income, GDP broken down to adjust for inflation, to adjust to anchoring at a price of a previous year, which is a deflator. Okay, where the price is changing, for example, rents and wages, stripping out the financial markets. Okay, so they're trying to look at future incomes, corporate profits. By the way, if the dollar goes up, That's going to impact corporate profits and the stock market will come down. Okay. Investment. This has to do with your solo growth models. Investment relative to depreciation. Okay. Employment projections. Okay. So Jay Powell said, why don't you just look at this? Because that's what we're looking at. So, to the uninitiated, they listen to the media and they hear the Fed has no forward guidance at all. What, they're making it up? No, they're data dependent. What data? I'll just give you this one. Maybe it's faster for you. Well, maybe it's this data. And when the next one comes out, maybe you should read it. You're welcome. Okay. And so now we're going to start getting some volatility. We're getting close to the meeting today at Jackson Hole. Be careful, be smart, trade the way you want. Don't chase price. Okay? Simon, I talk about that every single day for the last 20 years. So there's no need to repeat now. We have an event coming up. My opinion is irrelevant. We're going to have volatility, good, bad, and ugly. There's going to be some guesses. There's going to be some bets. Then the event's going to happen. There's going to be interpretation. There's going to be counter trends and stop wiping and multi different strategies getting entered all at once. And then we'll figure out what Jay Powell actually said. And then the volatility will kind of probably trip on itself. And then by noon, we'll probably get back on the horse and go where we were going anyways. So this will come down to your fundamental bias. In the swing trading group last night, we compared inflation rates across the major economies. And then we compared that to growth rates. We compared interest rate differentials. So not differentials between the economies, but between the current interest rate and current inflation to compare, are these economies in good shape? So for example, if the UK is going to jack up interest rates to 7%, 7%, should you start investing as a carry trade? Well, if the UK jacked up interest rates to 7%, but they have 15% employment, well, then you're losing 8% in real terms. Oh, Well, maybe that's not so good. So this is kind of the stuff that we look at. Growth, real rates, inflation levels, employment levels, consumer spending, fundamental analysis of flow, position flow, cash flow. Where's the money being put? But most importantly, technically, is this a good opportunity to buy or is this a good opportunity to sell? You got to remember, out of maybe 30 options of buying and selling, the vast majority of them should be neutral. And there's probably at any given time, probably no more than 3 or 4 buys and 3 or 4 sells. So you got to know what you're doing. So I'm going to leave you where we started. If you'd back out and look at the bigger picture, and that's what this is. Okay? If pound skyrockets today, buying on the long run may not be the right decision, but it could be on the short run. If euro skyrockets today, you could buy it. but it may not be the right decision on the long run. What about the yen and yield curve control? Okay. What about it? What direction do you have? What's your bias? You see this? There's my day trade. Nice! This concludes today's episode.